Hey everybody! Now this is the first moment that I've had to make a video with my comments about the rate hike because I did not have that opportunity earlier. So I'm going to do it right now. All right, now. Some things were as I expected, like the stock market sell-off, and some things were not as I expected, or I should say, not so much not as I expected, but the magnitude of the move was a little bit surprising. Let me start off with stocks first. We had initially a little bit of a choppy move. It went up and then it sold off. And that was actually one of the outcomes that I talked about when I sent out an email to MMT Trader subscribers today. I think the stock market's reaction was correct. I did not have time to really go over Yellen's comments because I was out on some meetings and other things. But I believe what was mentioned was the Fed's intention to hike rates 3 more times in 2017. So the stock market, I think, is ripe for a pullback. We saw the sell-off today. Okay, that's number one. Number two, the one that surprised me in the magnitude was, and it really was mostly the dollar yen. The yen's sell-off was extreme. Okay, and as you know, I am long yen. The sell-off in the yen today, at least relative to other currencies, it was extreme, and I fully expect to see that unwound over the next few days, next weeks, whatever. Okay, that was to me a pure panicky zombie kind of reaction. If you look at the what happened in euro, if you look at what happened in British pound, I think those held in quite well. All right, dollar Canada, Canadian dollar fell a little bit. You had a fall in oil prices. If you look at gold, I actually think gold held up pretty well because you had the zombies who sold on a rate hike, but gold was down about 1.25%. Not huge, all right? Could have been much worse than that. Now, I know some of you, it's been a rough ride. Listen, and I've said it over and over again, this game never gets easy. It never gets easy. And I know a lot of you are trying really, really hard with the mental game and staying cool and not trying not to get ruffled and rising above the adversity like I tell you to do. But you could be honest. I mean, you might feel, well, this Mike, this facing this volatility and dealing with it is very hard. Sometimes it's daunting. So I'm going to give you a little tip here. All right. It's very helpful and very useful because you try to be resilient and you do the best you can and you work through the tough times. You're going to make money. Everything's going to be fine, believe me. But if there's some tips or tricks that I could impart to you to help you with that, then I'm going to do it. And here's one of them. It's very, very important to get perspective. Perspective is an enormously helpful thing, all right? When you are looking at something close up, it could seem overwhelming. But when you are looking at it in the so-called big picture or from a distance, I mean, imagine yourself flying in an airplane. I live in Manhattan, flying over Manhattan. All these big buildings here, they look tiny when you're in an airplane. Okay, that's perspective. But when you're standing next to whatever, the World Trade Center or the Empire State Building or any big skyscraper here, you feel like a little tiny nothing. But when you're up there, when you have some distance, then the whole picture changes. Let's use this perspective argument because I had a guy, and he was a subscriber and he quit because he couldn't handle the heat because on one of my trades, the British, I think the euro pound thing, which I made a profit on, that went against us for a while, and we wrote it out, and we made a profit. And he's like, I can't, your trade went against you for 700 pips. It was like, or maybe it was in the pound or something. That, that's a 6% move. 6%. That's it. If you're in a macro trade, based on a fundamental analysis, if you can't handle a 6% move, now you might say, well, yeah, Mike, it's 6%, but it's leveraged. Aha. Yes, it is leveraged. But that's where you have to keep your exposure to the market within a level that you are not going to get blown out on a 6% move. It's back. I made a profit on that. So let's talk about gold. From my initial buy a couple of months ago, and it wasn't my initial buy because my initial buy was even, way before a lot of you even met me, was in December of 2015, a year ago, when I bought gold, guess what? When they raised rates, okay? And it went down the very next day, but then it proceeded to go up 300 points. Now, this recent buy, a couple months ago, just above 1,300, that's down, gold's down a little over 10%. 10%. Is it down 40%? Is it down 60%? Is it down 80%? I mean, then you're talking some numbers. If you're in a macro trade and it's down 6% or even 10%, think about it. If your business is off, if you're in a business and your sales are off or your profits are off by 10%, do you declare bankruptcy? Do you close out? Do you end the business? Do you walk away? If you own a house or a piece of property and the value of that house goes down 10%, do you declare bankruptcy? Do you ask the bank to foreclose on you? I mean, come on, people, you got to have some perspective. We are trading. We're not trading crossing of trend lines and moving averages, which is basically just playing noise. You have to understand that fundamentals dictate where the market is going to go. But in the meantime, you've got millions and millions and millions of market participants, actors in the market that, they're panicky, they're jittery, they're emotional. They don't have the skills. They don't have the understanding. Yes, you're going to get moves. You have to be able to handle these things. I'm in a position, the price went down 10%. Is that the end of the world? Is that it? Is that discussion over? Am I bankrupt? Am I out of the picture? Is the game over? No, absolutely not. And if that's the way you think, if you can't distill it down to that frame of reference, then you're going to paralyze yourself. You're going to scare the pants off yourself, and you're never going to make anything but losses. And every time you make a small little profit, you think you're going to pat yourself on the back because you learned something, but you learned nothing. You learned absolutely nothing, okay? The British pound trade that this guy was all crying and whining about, it was against me. It was a 6% move. I made a profit on that, a big profit. Now, the other thing that surprised me a little is we did not get a rally in the bonds. I thought we would get a rally in the bonds, but you see, some of these markets, like especially the currencies, and I think treasuries now, if you look at open interest in the futures, extreme concentrations in one direction by speculators. So it's just a matter of time. It is a matter of time. Now, let me get a little bit to the fundamental analysis because this is very important. Now, I've said in the past, and I'm the only one who said this, that rate hikes equate to higher inflation. They equate to fiscal expansions. The fiscal expansion part is good. We want that for the economy, but it's going to take time for that to kind of trickle down through. All right, the stock market now, as I said, will react in a negative way for a discounting of multiples, taking multiples down. It's the opposite effect of when they cut rates, multiples go up. In other words, prices go up, earnings don't go up as much. So now we get this effect of bringing multiples down. The inflationary impact. I'm getting back to my main point where I'm the only one who's saying this. We are going to see a pickup in inflation. You are going to see gold prices recover. You are going to see the dollar go down. Inflation is death for a currency. It is the one thing that could really, really hurt a currency. And you have to understand, people buying the dollar today, they're buying on a false understanding. They're saying, oh, the Fed raised rates by 1/4 of a basis point. You think that really, 1/4%. That has nothing to do with it. But the inflationary impact of a rate hike, and we're already seeing that. We saw it in the PPI this morning. We're going to see it in the CPI. The inflationary impact will eat away at the value of the currency. That's what inflation is, right? You get less for your money. The dollar buys less. And that is reflected in exchange rates. The inflation rate of the United States is much higher than that of Japan. So, I am absolutely 100%, 1000% certain of my position. I have a market which has been moved around, pushed around by market participants who know nothing, but I know what I'm doing, and I ride it out, and I endeavor to paint a picture with perspective to help me through the tough times. I got a 10% move against me. Do I close my business out? Do I declare bankruptcy? Do I say it's the end of the world? 10%, people. Okay, think about it. Anyway, we got to see. Here's a final thing that I'll say. Do not ascribe any particular meaning to any one day's action. Let me repeat. Do not ascribe any particular meaning to any one day's action or any 2 days' action or any week action for that matter. It's noise. Noise. Anything can move around in a day. Let's see what happens. But I stick to my guns, and I'm telling you, everything is going to be a profit. Everything that I say is going to happen. Everything. Perspective, stay calm, fight through adversity, and you will be fine. Bye.